Hi, I'll be summarizing classified balance sheet in this episode. That's in chapter 4 of the reference textbook, and the reference textbook is the 17th Canadian edition, Fundamental Accounting Principles, Volume 1. That's a reference textbook. So the aspect that talks about the classified balance sheet, if you want to make reference, is chapter 4. And chapter 4 is completing the accounting cycle and classifying accounts. Learning object the fifth learning objective in that chapter is the classified balance sheet. So a classified balance sheet is just like trying to emphasize classified as a word on a balance sheet. Balance sheet is a statement that shows assets, liabilities, and equity of a business as at a date. So why do we now call it classified balance sheet? So the word classified is to emphasize that this is a balance sheet that puts elements or content of that balance sheet into subgroups. It puts elements in that balance sheet under different subgroups. That's what we mean as classified balance sheet. That's a balance sheet in which elements are put under different subgroups or different classes. So the first one is the current asset class. The current asset is explained as assets that are used up or expected to be turned up to cash within 1 year. They are the inventories, the prepaid expenses, the 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 cash and cash equivalents, and trade receivables. These are current assets. They are expected to be used up or turned into cash within a year. The next category or the next class is the non-current assets or the property, plant, and equipment. These are assets that will be used up for more than a year. They are expected to have a lifespan that's more than 1 year. These assets over time would reduce value, that's depreciation. But the category where we show these assets, like the property, plant, equipment, land and buildings, they fall under these categories of property, plant, and equipment. Then we have another class, that's the intangibles. The intangibles are like the goodwill, the patent, the copyright, the trademark. They are owned by the business but do not have any tangible worth. We can't see them, we can't feel them, we can't touch them, but yet have values or add values to the business worth. So they are also under the assets. So we have the current asset class, the property, plant, and equipment class, and the intangible class for assets. Then we have the liabilities. The first class for liability is the current liabilities. These are debts of the business that are expected to be paid or settled within 1 year. They include trade payables, note payables, or short-term loans, if bank overdrafts. Uh, if you get a loan that you're expected to pay up within 3 months or 10 months, 9 months, that's under current liability or bank overdraft. They are accrued expense. These are under current liabilities. The next section is the non-current liabilities. Non-current liabilities are obligations of a business that must be settled, that would be settled in a period after 1 year. They are obligations or indebtedness of a firm that are expected to be settled after one accounting period, like long-term loans, like debentures for corporations. These are to be paid in after a year. Then the last section is the equity. The last category or the last class is equity. Equity explains the obligation of the business to the owner or the stake of the business that is owned or that is collected by the owner. Basically, it means the capital. Capital of a business is the same as the equity. Equity means the worth or the portion of the business that is a stake of the owner. So the introductory capital, additional capital, profit is added to it, losses are reduced capital. Um, Additional investments by the owner to the business, they increase it. Drawings or withdrawals, they reduce equity. This is the last section, or these are the items that will appear. As a summary, we have the current asset, we have the property, plant and equipment, we have the intangibles. Example of intangibles, I mentioned the copyright, the patent, the trademark, even goodwill. Then we have the liabilities, current liabilities, non-current liabilities. Then the last category in balance sheet, in the classified balance sheet, is the equity. So this is the summary of classified balance sheet, which takes care of the objective 5, learning objective 5 of chapter 4 of the textbook, Fundamental Accounting Principle. Thank you very much. If there is any question, please put under the comment section. It will be attended to accordingly. Thank you very much and see you in the next episode. Bye for now.